All right, let's dive right into this breakdown. Tomorrow is a massive day on Wall Street, specifically for one of the most closely watched companies in the entire financial technology space. Yep, we're talking about SoFi Technologies. We are gearing up for their highly anticipated quarterly earnings report. And let me tell you, the stakes in the market right now could not be higher. So the huge question hanging over everyone on Wall Street is pretty simple. Is SoFi going to soar or are they going to sink? Tomorrow is really shaping up to be a make-or-break day for them. The whole market is kind of holding its collective breath, waiting to see if SoFi can deliver another strong quarter or if these earnings are going to end up disappointing investors. We're going to unpack exactly what you need to know, what to watch for, and how to actually interpret this data before those numbers even hit the wire.
Section 1, the transformation context, from loans to everything.
You know, SoFi's origins were laser-focused on a very specific narrow niche, student loan refinancing. But honestly, that was just the Trojan horse. Today, they've completely transformed themselves into a full-scale digital financial platform. It's literally a night and day difference in their overall ambition.
Just to grasp the sheer scale of this platform today, look at this ecosystem. We're talking banking, investing, personal loans, mortgages, credit cards, and even back-end fintech services. They've basically packed an entire financial universe into a single app on your phone. And this hyper-aggressive expansion strategy, well, it's exactly what's made SoFi one of the most talked about and, honestly, highly debated fintech companies in the US right now.
But hey, with massive growth comes massive expectations, right? Because they've expanded so aggressively across all these super competitive sectors, Wall Street isn't just hoping for success anymore. They are demanding proof that this whole everything app strategy is actually sustainable. So every single earnings report gets fiercely scrutinized for any signs that this grand strategy is going to hold up in the long run.
Moving on to Section 2, the scorecard, 4 metrics to watch.
All right, here's the exact scorecard analysts are going to be grading tomorrow. Let's focus on the first 3 core health indicators. First up is revenue. Is the company actually continuing to bring in higher income? Second, profitability. Can they improve that bottom line while they're still pouring tons of cash into growth? And third, members. Is that critical customer momentum still going strong? These 3 areas, they're the absolute vital signs of the business that everyone will be dissecting.
But then there's the final, and honestly the most critical metric of them all, guidance. Now, you probably already know this is management's forecast for the months ahead, but for SoFi right now, earnings aren't just a look in the rearview mirror. This forward-looking outlook is the absolute secret weapon of tomorrow's report.
Strong guidance can totally lift a stock, while weak guidance, it can completely sink it. This forward-looking statement is so vital, it can literally override the past quarter's numbers entirely. Seriously, if SoFi just meets expectations but paints this incredibly strong picture for the rest of the year, the stock could fly. On the flip side, a weak outlook could send shares tumbling, regardless of how solid the past 3 months actually were.
Which brings us to Section 3, the reality check, market dynamics and volatility.
You know, earnings season almost always brings these wild price swings, and that's because the market reaction isn't just some simple math equation, it's psychology. Strong results coupled with sky-high expectations can actually trigger a stock decline if Wall Street was already pricing in absolute perfection. But on the other hand, just a slight beat of expectations paired with some optimistic guidance, that can equal a massive rally. Tomorrow's reaction is going to be driven entirely by these underlying psychological dynamics.
At the end of the day, it is all about confidence. Beyond the raw data, the revenue charts, the massive spreadsheets, earnings reports are fundamentally just a stress test of Wall Street's belief in the company.
That leads into Section 4, the Fintech ripple effect, why tomorrow matters for the whole sector.
So tomorrow's results actually carry 2 major impacts. Yes, obviously, it directly dictates SoFi's own stock price. But what's even more fascinating is how it influences the broader sentiment toward the entire fintech sector. Wall Street really uses SoFi as a bellwether. If they show that consumers are still borrowing, investing, and adopting digital banking at these high rates, it signals a lot of health for the wider industry. But if they stumble, well, the rest of the fintech world might just feel the pain.
Which really leaves us with one final, totally crucial question. Just how confident is management in SoFi's future? And will investors actually believe the story they're telling? You've got the scorecard now to decode the results yourself. So, what do you think the numbers will actually reveal tomorrow? I guess we'll just have to wait and see.